Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, Professor of Economics at the Catholic University of Korea. Professor Yang, good afternoon. Thanks for making time today.
Happy to be here.
Well, last Friday, stocks on Wall Street ended the week on a high note as U.S. retail data came out strong. A solid rebound for bank shares. Across the three main indices, gains of close to or more than 2%, but for the week they were all down or about flat. What's the story in the global markets as we start a new week?
Okay, well, as you mentioned, Friday was a very good day for U.S. indices, and the rising rates made the investors very optimistic about bank stocks. And the Citicorp and Wells Fargo had their quarterly reports, and they weren't as bad as some people feared, whereas the previous day you had a report from J.P. Morgan Chase and Morgan Stanley, which was about as what was expected. So on Thursday, with those reports from J.P. Morgan Chase and Morgan Stanley, the market was a bit down. But when Wells Fargo and Citicorp beat estimates or did better than expected, it did drive the market up. Another factor driving the market up was tech stocks that better than expected. And the reason seems to be that the concerns about the Fed raising the rates by 1 percentage point at their meeting on July 24th, it seems to be shrinking very quickly. So not only is the U.S. market, but the global markets are reflecting that optimism that perhaps the Fed will not raise the rates by 1 percentage point, but it seems pretty sure at this point that they will raise it by 0.75 percentage points. U.S. had some fairly good economic data coming out as well. As you mentioned, the retail sales were higher than expected. It rose 1 percentage point in June. It was higher than the projection of 0.9%. So, but we should mention that the rise in 1% was less than the inflation rate. So in terms of purchasing power or real spending, probably fell a little bit. But but because the numbers actually went up, the fears of recession seems to be less than what the market had previously expected. Debt to after-tax income also is reported to be below longer-term average levels. It came up at 9.5%. And along with the strong job market data that came out 2 weeks ago, it does seem like perhaps soft landing for the United States is possible. But for the week, as you mentioned, the market was down. Dow was down 0.2%, S&P by 0.9%, and NASDAQ by 1.6%. Year to date, Dow is down 14.5%, S&P by 19.5%, and NASDAQ is down by 27.7%. For the international markets, last week, several central banks raised interest rates. South Korea was one of them, but it also included New Zealand, Singapore, and Philippines. And Canada raised the rates by a full percentage point. Europe, they had a fairly good day on Friday. All of their major markets, DAX, CAC, and FTSE, rose. CAC and DAX rose by more than 2%. But the rising energy prices are now hitting European firms directly. So we'll have to see whether their optimism continues. On Asia, on Friday, Shanghai and Hang Seng had fallen after news that China's second quarter growth had slowed more than expected, and it grew only by 0.4% compared to 4.8% in first quarter, and much below 1% Reuters poll estimates. This is the weakest growth since the beginning of the pandemic at first quarter 2020. And there has been growing concerns about real estate bubbles and the financial sector. But the retail sales for China came in much stronger than expected at 3.1%. And along with the recovery in the other global markets, Nikkei, Hang Seng, and Shanghai are all rising today. And the markets, not only in Asia but around the world, seems to be shrugging off the bad news. But there are some concerns growing now that the oil prices, which have been falling, may rise again later in the year when U.S. institutes tougher sanction measures, including price cap on Russian oil.
Right, and today the KOSPI and the KOSDAQ both closed with sizable gains. We saw foreigners return to buying on the KOSPI with chipmakers and big tech leading the gains. Shares of Naver up around 6%. Tell us about the domestic market.
Okay, well, Korea seems to be joining the global optimism as well. Like the United States, the big gains took place in the financial institutions and tech. Some of the firms which gained today included SK Hynix, Kakao, and Naver. Today, KOSPI was up 1.9%. It ended today at 2,375.22. Foreigners bought, individuals and institutions sold. KOSDAQ was up 1.9%. It ended today at 776.71. Institutions bought, individuals and foreigners sold, but the net amount sold by foreigners was minuscule at 2 billion won. But year-to-date, KOSPI is down minus 20.5%. KOSDAQ is down minus 25.2%.
Well, this week, Professor, we'll get the latest Green Book report from the Finance Ministry on the state of the Korean economy. Last month's report expressed concerns about inflation slowing down investment, a possible slowing of the recovery in Korea's exports. What will you be looking for in this report, and what else is on your radar this week?
Okay, well, the big question is whether Korea is heading for a slowdown and how bad will the slowdown be. Some of the other Korean statistics that coming out is the May report on economic activities for young people, which is very politically sensitive. On Friday, Producers Price Index will give us some idea on how bad the inflation has been in June, as well as how far this may last, since Producers Price Index is usually considered a leading indicator. Internationally, you have the European Central Bank releasing their consumer price index and inflation numbers on Tuesday. And lately, their inflation has been catching up to the U.S., and they may even surpass it because they have been hit directly by the Russian invasion into the Ukraine. And then some other interesting numbers will be U.S. new housing building permits for June, which is a forward indicator for construction and economic activity. And on Wednesday, we have the Bank of Japan economic outlook. And on Thursday, we have the European Central Bank monetary policy speech, which hopefully will give us some idea on how the global economy will go in the second half of the year.
Indeed, we'll be looking forward to catching up with you later in the week on all of that. Professor, thank you so much for coming on the program. We appreciate it.
Thank you.